Okay. Our guest today truly appreciates the fact that founders just struggle, and today is here to share some of her own. From being a mother of three kids and, of course, her other kids, tech startups, she has had her fair share of working through the dirt. Today, we talk about being a parent and a founder. We compare bootstrapping versus VCPE and all sorts of alternative financing models, which are very cool. So stay tuned in for that. We even dig into the massive tech growth that's happening in sub-Saharan Africa. So, without further ado, serial tech entrepreneur Lauren Cascio, welcome to the dirt.
Thanks so much. Thanks for having me, Jim. I'm really excited to be here today.
Yeah, absolutely. So, obviously, a lot to talk about, which I just mentioned, but let's start with kind of the roots of who you are. Tell us who you are.
Ooh, well, I'm a Floridian, which I think is unique. I live in Puerto Rico. I have for the last decade. I am a mom of three, most importantly, and a passionate entrepreneur, likes to build cool tech things.
Yeah, and you've built a lot of cool tech stuff. So take us through kind of that journey.
Yeah, so when I first started my very first company, I was coming out of my divorce at the ripe age of 26. I had two young kids, two toddlers, or school and toddler school age kids, and I was living in Puerto Rico, a place where I had absolutely no family. So I decided to jump the cliff and yeah, take the dive into entrepreneurship, and it has been quite a journey so far. So I went into health tech and then changed sides of the table almost 2 years ago in investment and non-dilutive funding.
Investment and non-dilutive funding. So we've talked
Mm.
on this. We've talked in a few episodes around all sorts of models, right? VC, PE, bootstrapping, but this is a whole kind of new landscape around, alternative financing models. Can you talk to us a little bit about some of your struggles there? In the previous funding models that's led you to be so passionate about alternatives.
Yeah. So I have a ton of experience here and a lot to say. Um, so a lot of my own experiences with my previous investors and previous boards have brought me brought me to the decision to get into investing myself and also pursuing new options in non-dilutive financing. And now, eventually, to push data as an asset on the balance sheet as a way to allow um, companies to recognize the value in some of the assets that maybe traditional banks or lenders or investors wouldn't see. So I can bring you through all of those and then touch on the tricks of the trade. But do you want me to cover first, like what is dilutive financing versus non-dilutive financing?
Yeah, that would be great.
Okay. So dilutive financing requires you essentially to give up ownership or equity in exchange for capital. So early on, it can often require you to give up like a manager role or board seat, as well as things like preferred equity. This is what most entrepreneurs do. They go down this journey, they have an idea, they start to like build a cool business, and then they're like, okay, well, I need somebody to give me money to hire developers or come up, hire a marketing team and start to build this product and find clients. Um, so that's like the normal route. You can read tons of books about it, lots of stuff on Google about where to get diluted financing. You hear about all the big VCs. Depending on your geography, it may be easy or difficult to reach it, which is one of the main problems.
Mm.
It's typically network and geography driven. Who do you know? Where do you live? Really can provide you or prevent that access to capital. So a lot of gaps in equity financing. And then there's non-dilutive funding. So non-dilutive funding captures a bunch of different types of funding. You have grants, and grants can be government grants, they can be scientific grants. You have asset-backed lending. So that's like if maybe you have machinery or like real estate, or even more recently, intangible assets. You can take loans out on that. You can get government loans. I think a lot of early stage entrepreneurs know about SBA loans. You have revenue-based financing now. That's like Founders Path and Uncapped and PIPE. There are tax credits. So I live in a place, Puerto Rico, that offers huge incentives for certain types of development, like research and development. So there's a ton of biotechs here, and essentially the government, just for creating products here and providing employment to the island, give you cash back every year. There's crowdfunding. So for consumer products, this is one of my favorite types of funding because you have buy-in from your customer base at the beginning. That's like Kickstarter and Indiegogo. You have traditional venture debt, which is, we'll call it minimally dilutive, because typically there are warrants or some type of small equity pledge in there. That's usually for a little bit later stage companies. You can go to like Silicon Valley Bank, and after you've done a big raise, you can take additional capital as a percentage of what you've just raised. You also have some accelerators that give you non-dilutive financing in the form of grants. And then sometimes you can consider convertible debt non-dilutive, although it has dilutive properties. I hope that wasn't too much.
No, that was great. I'm just so let's start on the dilutive side, because you've raised dilutive funding before, right?
Yeah, I've done both.
Yeah. So tell us about the experience on the dilutive side first, and then we'll jump into the non-dilutive.
I wish I knew what I know now when I was first raising capital. So it was like a really weird way to raise capital. Number one, it was my first time founding a company. I was a single mom to 2 kids living in Puerto Rico, which is like just like this really weird geography for raising money. And I didn't go to like a fancy school with this like uber cool network where I could just like call on a buddy and say, hey, do you have like friends at this VC or this bank? And so my path was probably a little bit less traditional than like the stories you see from Silicon Valley and Austin, now in New York, the cool cities that get funded. And so we ended up raising, first tranche of capital was like seed money, and then some seed money from private equity firm, and then more what I'll call seed money, because it was pre-series A, from not really a tech investor, but just a generic investor. And I learned a lot the hard way. So I had to learn all about preferred shares and warrants and giving away board seats and control of your company the hard way. So things that I didn't know weren't like standard or normal, I accepted as standard and normal. And now, knowing that, I try to advise as many entrepreneurs as I can on understanding what you're signing, understanding what's in the agreements, understanding what's coming with that money. So I think that entrepreneurs focus a lot on valuation and not enough on the covenants in the agreements. So I can explain like what that means.
Yeah, please.
Okay, so let's talk about an entrepreneur, and they're like, we're raising this round, we're raising $3 million at like a $25 million valuation, and yeah, the private equity firm is like, okay, great, fine, sure, we'll take your valuation. What they're not focusing on is that there may be liquidation preferences, or there may be a new class of shares that they're requesting, like preferred shares, which basically sets the floor for the return for the investor. So what that means is, like, on a liquidation preference, for example, they may have like 2x or 3x. So if something happens to the company, that investor, any money that comes out of the company is basically guaranteeing themselves like a 2x regardless. And that doesn't matter if it comes from the founder pool or the employee pool.
Right.
They're going to get their money back. Sometimes they do it in the form of warrants. Sometimes they do it in the form of an anti-dilution clause like full ratchet, where they're guaranteed a price that they paid, even if the value of the company decreases and the company has to do a down round or sell for lower, they're still guaranteed that price.
Yep.
And meanwhile, the founder's like, yeah, but we did a press release and we raised at $50 million. And it's like, okay, but did you? And what does that mean if you have to take on more capital or things change? It's just not something you think about in your first round. I don't know how many you work with entrepreneurs, right? Like how many do you see that fall for this?
I deal with this all the time, and unfortunately, I deal with it after it's happened in all too many scenarios, and navigating that rather than being engaged in front of it. Which is it's just entrepreneurs don't know what they don't know. And it's not the job of the VC or PE to educate them on that, right? And as much as we want it to be, so that things may be a little bit more of a fair ground, that's what makes them have their business. Getting entrepreneurs, founders getting educated on these things is so incredibly important. So now let's flip to and that some of the things you mentioned, pref, warrants, like all those things, they happen all of the time. But let's flip to the non-dilutive aspect of this, right? So why the passion around it, and what does that mean? What are some of the examples of that beyond what you gave in the overview?
Yeah. So by the way, all VC is not bad. I just want to say that there are great VCs out there that really care about founders and helping them scale and grow and having mutual success. It's just not all of them. So one of the tricks that I tell entrepreneurs that I mentor now is that they should do like a reverse interview. Like you're being interviewed by an investor, and what you should do is reciprocate and interview their portfolio, understand how they work with their portfolio, what has been the experience. And I'm not talking about the ones that they like put top and center on their website.
Right.
Like go to the other portfolio companies that they're not, promoting, not their big successes. So why non-dilutive funding? Well, I think it's a fair way of funding companies and it's more tangible. So even before, I got into non-dilutive funding even before we started to see like an economic downturn and really these things shift in the VC world, where you have probably LPs missing capital calls and funds putting the brakes on deploying capital, valuation stalling out, more companies trying to tap into non-dilutive sources. So this has been a passion of mine, really, again, from my own experiences in dilutive funding. And so the question was, why am I so passionate? It's just a fairer way of funding companies. It's more tangible. Like let's look at it. If you're doing revenue-based financing, they're literally just like looking into how much you make and financing you X number of months. And they're just going to take a little bit, a drip, until it's paid off. The same for merchant cash advances. Asset-backed lending, very similar. Like this is the LTV. This is what we offer. This is what we're going to extend you based on the value of the assets you're allowing us to collateralize.
Sure.
That said, there are downsides of some non-dilutive funding. There can be like crazy covenants that have like all these crazy inspection requirements and could potentially cause defaults. There are senior secured positions that debt holders can impose on companies. This is actually very common in venture debt, where if something happens with the company, not only do you owe them the money, but you might owe them your company, including your building. And so you've just lost your entire business. So that was why I started Gulp. That was a lot of the reason behind it. So I had built a business that had its main source of revenue was data. and data was like not recognized as an asset in the company, even though it created all of this revenue. And so I thought, well, what friendlier way of lending money to companies than allowing them to borrow on an asset that nobody else will recognize, right?
Mhm.
And even in the worst case scenario, they default, not coming after their company, not going to shut them down for not paying back a loan. And so it was supposed to be just like a friendlier, option for companies.
Yeah, and it's an incredible option, and because data is kind of the new oil, right? At the end of the
Oh
day,
yeah,
it's one of the
a lot
most
of people say that.
incredibly valuable things that there is. So you've got this new company, Gulp Data, relatively new platform that can use data to access capital without giving up equity, right? Non-dilutive.
Mhm, mhm.
Um, and Tell me about some of the. Do you have any cool stories to share of companies, whether it's one of your own or somebody else's, that have gone through the process and like realizing that this type of funding was out there?
Yeah, it's actually we've done no marketing, right? Like so all of the companies, and we've probably analyzed, I don't know, at least over 100 companies at this point, that have come to us, and we started lending in April. So this is still fairly
Oh,
new,
wow. Yeah.
pretty new. I don't know. Yeah, it's new.
Yeah. Very new.
Very new. Yeah. So basically, like it was, they were, I first went to VCs in my network, people that I trust, that I like their portfolios. I think that some of the companies in their portfolio may be a good fit. And so, yeah, the story is basically a lot of those VCs were like, "Hey, I know," because this is a tool for VCs too, right? To not dilute, to hold their positions, even during a time when maybe they can't do, a round at a higher valuation. They also lean on non-dilutive funding.
Hmm.
So they sense, we've had a bunch of companies come through. And yeah, they do a survey, we qualify them, say if it's a good fit or not, and then we take them through the process of sampling and valuing their data assets. It's yeah, I mean, they're all really cool stories. These are all companies from all stages, so we have funded, like, I would say pre-seed all the way up to like series B, series C stage companies, and now we're starting to get more like traditional companies, like multinational billion-dollar plus companies that are like, "Hey, we're interested in understanding the value of our data assets. Can you help us?" And so, yeah, it's been a really interesting learning experience. It's been the most. This is like the most fun I've ever had building a product. I'll tell you.
I love
Like,
that. Yeah,
yeah.
that's great. So if I hear you right, this is not only companies that are have a data revenue model, right? This is companies
Mm-mm.
that simply have data, whether they know exactly what it's worth or not. And you're helping them to get an understanding in some cases of not just how to get funding for it, but what their data maybe actually be worth at the end of the day as well.
And hopefully encouraging them into a secure and private and sustainable data monetization strategy long term, which will add another revenue stream
Absolutely.
to their already existing business.
Yeah.
Yeah. So that's the long term
Powerful.
goal.
A powerful revenue stream as well.
Yeah.
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 That's great because I actually have a few folks who, after hearing that I want to introduce you to, that are a little bit later in their evolution, later stage, growth stage, if you will, but they don't have data-led revenue models, but they've got millions, if not billions, of data points that they've been collecting that means something to somebody. So,
Yeah.
that's awesome. Very cool, Lauren. So so when you connect all of this experience, what you're doing at Gulp to kind of change the landscape, if you will, or shift the landscape, the fact that you're working with institutionals in some cases, VC-backed companies, right, and also companies that may have bootstrapped and some other form of funding along the way, what what ties all this together for you as it relates to where you see Gulp Data in 5, 10 years, wherever whatever that might mean?
Mm. So I think that the main goal with Gulp Data was to be able to help as many companies as possible secure funding in order to continue on their mission, which is typically impacting their communities or impacting the world.
Hmm.
And so, long term, I believe that in doing so, we will be able to open up this very opaque market, which is like data exchange, which is a huge market. I mean, like just one segment of it is like $250 billion, like this past year.
Yeah.
Um, and yeah, really bring to the surface that this is an asset that should be recognized under GAAP practices.
Mm.
That was, I think, essentially like the vision and mission here was to change GAAP standards.
Love that.
Now, just like something small,
Yeah, no big deal.
no big deal.
Oh, that's cool. That's really cool. And so that's kind of where you see things headed, is helping a lot of companies, changing gap standards along the way, and really leaning into that message about data being the new oil, if you will.
Yeah.
Yeah,
And just, I don't even know if it's, I mean, for us, it's just data, right? But there are so many intangible assets
yeah,
now, brands and influencer relationships and patents, which have, I think, long time been used as collateral. Um, Royalties, all of these intangible assets that just make more sense in the 2020s, 2030s. Like they just make more sense as the core value of so many businesses today. So, got to
yeah,
catch up. Finance has got to catch up.
yeah. No kidding, no kidding. The things that you mentioned as you were going through dilutive funding, or that you kind of advise other folks on who may have gone through it or might be thinking about going through it, just what to be aware of, and what questions to ask. Are you seeing a lot of that, kind of, a lot of those messy cap tables, a lot of, messy situations for founders, for the companies that you're dealing with at Gulp? Are you seeing a lot of like the ability to kind of fix some of that, or at least help augment some of it so it doesn't get worse?
So, one of the things that we like our valuations to do is actually to provide some tangible evidence of value in an intangible asset that their investors or board members might not be able to understand or grasp. So, we're trying to really bridge that gap between these like traditional finance crew and digital asset crew. And so we are trying to empower those companies to, or those founders to have some tangible evidence of, hey, this is what it's worth. Like
Yeah,
right now, this is what it could be worth if we, this is what it could be worth if we just made like these small investments. And this is the additional revenue this could potentially bring our company. And imagine what that would do, right? To our market cap or to our valuation. Um, and so, yeah, it's, I mean, I try not to like talk to every founder that comes through the pipeline, just because it's so early stage. I've talked to a handful of them.
hmm,
Yeah, they all have horror stories. Like every founder that has at least raised like through a Series A has some horror stories.
yeah,
I mean, we all have battle wounds, right? Like we have learned, most of us have learned the hard way, and it's because when you, I did a ton of reading, right, on like how to raise money and what does it mean, and I had lawyers, and you don't really understand the consequences of like blindly accepting terms just because you got like one thing that you want,
mhm,
like a valuation,
right,
until after it, it has a poor outcome.
right,
And so, yeah, I mean, all of the founders, well, most of them have really messy cap tables. They have board members they wish that were not there. They have some kind of, liquidation preferences somewhere in their agreements. They have preferred shares, no doubt, which means they don't get paid out unless
right,
something amazing happens, a miracle.
right.
Yeah.
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 So and you mentioned the changing of things from a gap standpoint, but then I think you also mentioned helping people understand what the asset could be worth in a different lens. Is that kind of like comparing like a 409A valuation to, things
Exactly.
that a 409A might miss? Yeah.
Yeah,
Yeah. No,
exactly.
that's all I've
Very similar. Yeah, and it
been in the
helps
back of my
it.
head for years. Why the hell can't somebody do that? Now you're doing it. That's great.
Let's, yeah, send some our way. We're happy to show it off.
Damn right I will be. And so those listening too, keep that in mind, because this the landscape is tricky around capital raising, financing, however, whatever term we want to use. But at the end of the day, there's a lot of models. A lot of them are newer, like Gulps, and there's something out there for everybody. And that's so great to hear. So
Yeah.
I just want to switch gears a little bit. And we talked about it briefly around being a parent and being a founder, how you've went through being through a divorce and having raising three kids while raising startups. And like, these things are not like the easiest things to do at the same time. In fact, they're quite challenging. So how did you do it? For those listening that like are they might have their kids are thinking about starting a startup or struggling to figure out a way to balance, like, how are you able to do what you've been able to do?
I don't know if there's like some big secret. I don't think it's a big secret. It is like straight hard work. It is not easy. It's not easy to raise kids. It's not easy to start companies. It's certainly not easy to do them simultaneously and alone.
Yeah.
For the record, I am no longer alone. I've been with my partner long term now for like 7 years, and so I didn't start the newer ventures alone, and I didn't have the third kid alone. So, but going back to what was it like to start on this journey of entrepreneurship as a single mom of two, newly divorced, like had been through traumatic experiences. I had to learn to compartmentalize a lot. So, like, pretty much my personal life was like in flames, and then I have two toddlers, and I'm still scrambling to like make sure bills are paid and that there's food and that the kids have school and all of the things that they need. So I had to work full time, but then I also had to show up for my company and my team for free because we hadn't raised money yet. So still supporting myself with my full time job, where I think I slept like probably 2 hours a night. But I had to compartmentalize. You have to be excited and inspiring and happy and like ready to like take on the world every time you show up for your company. And so I had to like box all of whatever was happening at home and like shove it away. That might mean turning off my phone or silencing everything for however many hours I needed to be at the office or with our first clients. Yeah, that it's hard. It was really a humbling experience because there's like no glamour in it at all. You're up all night, things break, you're like sitting with your dev team trying to get things fixed, then get to a client meeting by like 7:30. Kids have to get dropped off, and yeah, it's I don't know, my brain has probably put like mostly as a protective mechanism, mostly fogged a fog over all of this, but I know it was insane.
All right,
It
quit
felt
scaring the shit
insane.
out of my audience, why don't you? I'm just kidding.
I'm scaring everyone. Oh my gosh, I know.
No, listen, I mean, this is you're right. This is not like, hey, let's go start a company. This could be fun. Right? This is like real stuff where
No.
you've got lives that are on the line, not just your family, but lives that are at work and people that are inspired through your vision. And it's hard. And
Yeah.
that's okay that
And
it's
no,
hard.
you learn to be efficient. Like you compartmentalize, you're uber efficient. Like whatever most people probably do in like a 10-hour day, you can get done in 2 hours.
Yeah.
No doubt. You have to surround yourself with like people who are just smarter than you, which can be very intimidating, specifically if like you are not educated in that field or you weren't an entrepreneur before. You're like learning it as you go, right? You're like at night frantically reading books on like, is this normal? um and so yeah, you just have to be smart with your time, allow yourself to be humbled and get through it, power through it, like with that end goal in mind.
Yeah. And we talked a lot about Gulp and the financing and how you're changing the game there, but one thing that I actually kind of saw as one of the most inspiring things, even beyond that, was what you've been through over the course of your familial life, and obviously the obstacles you've overcome there, and then also some of your passion for the growth in sub-Saharan Africa, which you're doing some other incredible things in, right?
Yeah.
Talk to us a little bit about why sub-Saharan Africa, what you're doing there, and yeah, just go after it.
Sure. All right. So I'll go full transparency. So it's been a passion of mine for a really long time, even before I started Gulp. And I thought that I wanted to start a fund to just invest specifically in sub-Saharan Africa, specifically in health tech companies. And that would be the way that I could make my impact most efficient, which is my like North Star. Um, and so I started making investments, started raising a fund, and even got to first close. But I'm not actively deploying capital right now because so much of my time, it wouldn't be fair. So much of my time is consumed in Gulp Data, which I believe I can make an even larger impact. So, but let's talk about Africa because it's such an exciting geography. There's so many exciting things happening. So I have started making investments in companies across the continent. And why is it so exciting? Well, the first reason is because it doesn't have the population problem like the rest of the world has. So there are like 1.3 billion people in Africa, and something like 70% of the births over the next 50 years globally will be on the continent. So, I mean, that's like
Wow.
mind blowing if you think about it. It's crazy. And so they don't have the population issues. It has this growing population and a huge need for technology and advancements. Not to mention, they've leapfrogged into digital technology. Like everyone there has smartphones, right? A lot of people have smartphones, and if not, they're at least connected on some type of mobile device. And you can't really say the same for most other developing regions, including like Latin America. And so that's one of the main reasons. There's also a lot less bureaucracy because they're so when you look at more, mature markets like United States or Europe, North America in general, you have like a ton of red tape implementing new technologies because there's already this digital but kind of antiquated way of doing something,
Mhm.
and those are owned by like multinational huge multi-billion dollar companies, and in order to implement a new technology you have to like really work your way through them. Well, the same is not true throughout a lot of the countries throughout sub-Saharan Africa because there just wasn't a solution, and so they're developing those first foundational solutions now. um so it's, yeah, more accepting, easier. They also have like they don't need to become multinational companies to be successful because the total addressable market is large enough in their region maybe, or in their in their country. So
Less
yeah,
resistance to technology across the
yeah.
board, sounds like. And you guys are focusing largely on health tech, correct?
Yeah, so that focus is largely on health tech. And the reason, again, goes back to my North Star, which is impacting lives.
Hmm.
And so looking always for impact technologies. How are you positively impacting your direct community? How are you positively impacting maybe beyond your direct community into different countries? And so a lot of times that happens at the fintech and health tech level because those are foundational components of
Sure,
building. Yeah.
sure. And are there a lot of solutions right now for healthcare, health tech out there, or is this kind of? I know you mentioned before to me, I think that things are kind of 2 decades or so behind in many cases in the way that you look at sub-Saharan Africa. So what are the solutions that are out there that exist today?
I mean, so that's exactly it, is that they didn't have this like bridge of
Yeah.
like, hospital system, semi-hybrid. You Not everywhere, but in a lot of places, it's just not as common to have like these, partially digital solutions that have filled the gaps for like the last 20 years or 30 years. And so, even, I mean, the technology I would say is similar, right? Similar to what you would see in Latin America or the United States, but it's the first time it's being introduced. And so it's like making a huge impact. It's making, just huge strides, right? So like, I don't know, maybe it's like telemedicine. It's still telemedicine. It's still like a doctor or nurse that you're reaching virtually, but it's not that they offered telemedicine through an insurance carrier or through a hospital or clinic prior. So you didn't have like that
Barrier
middle
out there.
step.
Yeah.
Correct.
Yeah.
Yeah.
Yeah. Got it. Got it. No, that's so. Are there any cool solutions? I know you guys are even earlier there that you haven't rolled out any, but are there any really cool companies that you've seen individually that you've invested in that are really changing the game in sub-Saharan Africa?
Yeah, so actually, so I've done some personal investments that my intention is to roll them eventually into a fund.
Yeah.
But Gulp has also done we've analyzed a number of companies from the continent and made investments across the continent. So it's geography agnostic,
Yep.
which is why I believe it will make an even larger impact. Cool solutions. Yeah, there are some like really cool solutions. One of the companies does clinical trial data for African populations, which is really needed in pharmaceutical research. It's one of like the biggest gaps in pharmaceutical research. Another one delivers medications in a metro area in South Africa. Another one does on like at home clinic services, something that would normally take you like a day or two to get done, like a blood draw. They come and do it from your house. And then another one that's actually like a fintech hybrid that does financing for like revenue cycle management, essentially in the healthcare industry. So that falls in like the health stack. Yeah, so there's some really cool technologies out there.
So we have obviously a lot of founders that we cater to it from an audience perspective, but we have a lot of investors who listen in. So if there are investors looking to get more active in some of the, whether it's the sub-Saharan region that you mentioned or some of the work that you guys are doing at Gulp, any advice to them as they're starting to dip their feet in the water in some of those areas?
I love to hear it. It's so funny is like I'm starting to get in my inbox. People, anytime I start something, people are like, "Yeah, you sound crazy, but it sounds cool." So I've gotten used to that. But it's so funny is like now after like 2 years ago talking to people about Africa and data as an asset, we'll do both. They're starting to email me like, "Oh, I just got like this email list of a bunch of companies in Africa. These are investors, like US based
Yeah,
investors." So I'm just so happy to hear it.
love that.
I'm like I'm mostly friendly. I'm mostly a friendly person. So if anyone wants to reach out, feel free. I'm happy to chat about data as an asset, how we can help your portfolio. I'm also always happy to chat about Africa. I have a ton of contacts there, just like in the, tech and accelerator scenes, happy to make connections. They're always welcoming US based investors. That's like one of the main challenges there is capital.
Yeah, a lot of money here though. So
A lot of money here.
let's
Yeah.
match that up.
Yeah, exactly.
So, at the end of every one of our episodes, we ask each guest what I call the founder five. So it's things that are all about you, Lauren, your growth, your company's growth, you name it. You ready to get started?
All right.
All right, cool. So, first,
Now I'm nervous.
oh well, you should be, but that's okay. Yeah, no, don't be nervous. No, number one, the top metric or KPI that you are relentlessly focused on.
Yeah, positively impacting lives. This is probably not a normal KPI. It's not a BS answer. This is it. This is my North Star. So as like a health tech founder, I wanted my technology to help as many patients as possible, help doctors help their patients as many as possible. With Gulp Data, it's the same. I want to help founders get funding so they can help as many people as possible. That's what I call making my impact more efficient. And so impacting lives, positively impacting lives. That's it.
You know, I've gotten about 5 or so what I would say sustainability KPI answers, whether that's about environment, community, or in your case, just basically plain human. So I love that answer, and I hope I get it again.
Thanks. Me too. I hope
And
that's at the core of all entrepreneurs' journeys.
yeah, it certainly should be. So, all right, number 2, top tip for growth stage founders like yourself.
All right. So growth stage founders. This is nothing like being an early stage founder. Alignment is key. And why is because a growth stage is when a founder has to go from being a founder to being a delegator. And that means that they need to have alignment with their team, with their co-founders, and with their investors. They need to be able to delegate in order for the company to scale properly. You're never going to be able to do it by yourself. And so that is one of the most painful processes because building a company is so much, specifically your first company, is so much like having a child and having to kind of let go, take a step back, and take a backseat to the teenage years where you believe you've instilled all these values and this alignment, and you need to let them work it out themselves. I don't have another analogy. That's the one metaphor that came to mind.
Enough said. Mic drop. So true.
Mic drop.
So good. So good. All right. Favorite book or podcast that's helped you to grow as a founder?
Okay, so this I can't answer in one because for every stage of my life as a personal and business, different books have had different impact for me. But I will say one of my personal favorite books, the one that I go back to a lot to reference, is a book called The Prophet from Khalil Gibran. Okay. Yeah, I received it for the first time as a gift when I was turning 18 and graduating high school from my mom's sister, my aunt. And I was like, oh, what is this hippie stuff? And I came back to it a couple years later. Yeah, just a few years later after I became a mom, way too early. And I was like, okay, this is interesting stuff. And I have gone back to it and I have gifted it many times over. It's an amazing book. I feel like every household should have one. A recent book, so I'll give one. A recent book that I've read just because of where I am today is by Doug Laney. It's called Infonomics. And it's a great book for anyone who wants to understand better how organizations use data. So anybody who's building a company, I think, should have a foundational understanding of how data can be used for direct and indirect monetization. That means improving your own operations just by using insights that you've created. So that's probably one of my top recommendations, just for where I am right now. My favorite go to bed podcast, I don't know if this is goofy, but it's Planet Money. I listen to it all the time before bed. It's just you shut your brain off, you listen to some cool stories and learn about some, I don't know, economics.
Yeah.
Why not?
Love that. Very cool. Very cool. All right, we'll get all those in the show notes for you guys too, so that you can go ahead and take a listen or take a read. All right. Last couple are a little bit out there, but I'm sure you'll appreciate. So the fourth one is, what actor or actress would play you in a movie?
Oh my God, this one makes me cringe because I would hate to think of myself in a movie. Okay, so my youngest child, she's 3, she really likes bubble guppies. And I can totally relate to this underwater world. And so I think I would want to be portrayed as a bubble guppy
Oh my
if I
God.
had to.
Beautiful.
Yeah, why not?
Yeah, why not? Love it. All right. And last one is, what is going to be the title of your autobiography when you've achieved all you set out to?
So I don't know if I can say this one because it has a curse word in it, but it's called Bereft of F word.
Bereft of fuck. Yeah.
Bereft of fucks.
Okay.
Yes.
Bereft of
Yeah.
fuck.
So, oh my goodness, I'm sorry. Uh, I didn't silence that one.
It's all right.
So
Too bad it didn't
bereft of
happen when I said the word itself. That would have been really clutch.
exactly, exactly. It would have like bleeped it out for us. So bereft of fucks is yeah, I'll give my partner credit for this because this is how he describes me.
Hmm.
But yeah, it goes back, I think, to being an entrepreneur and my life experience. Like you can't care what other people think. You can't care about judgment from the outside. You've got to put yourself out there. You can't be afraid of sounding stupid or disagreeing with the entire room around you. You have to really like live outside of your comfort zone to make your vision work. Oftentimes, and I'm not calling myself a visionary, but visionaries are going against every grain. And like people cannot understand what they're thinking or what they're seeing.
Yeah.
And therefore, as like a defense mechanism, they, will say mean things or disagree with you. And so you just can't care. You've got to shake it off. You have to have thick skin and continue on. So that's been a core value I've learned. I didn't know that about myself until my partner pointed it out some years ago. He's like,
So
you just
good.
don't care. Like, I don't. You're right.
So good. And I'll go ahead and call you a visionary since you won't call yourself that.
There
Listen, you've
we
given
go.
so much to our listeners today, Lauren. Time for a little bit of self-promotion. How can those help you out since you've given so much to them today?
Mm, yeah. So, well, if you weren't already, so for the entrepreneurs and investors, if you weren't already centered around positively impacting the lives around you, deeply consider making that one of your core policies in your life. Also, one of the things that we would love, and this does help me, would love is for everyone to explore non-dilutive funding and tell me about your story. So it can be Gulp Data, it doesn't have to be, but if it wasn't, let me know. Or if you had a really positive VC experience, or if you're a VC and you had a really positive founder experience, I'd love to hear those stories. They help me continue on this journey. So
Cool. That's great. And what's the best way for folks to get in touch with you, Lauren?
emailing me. So Maxine sees it. I had an inbox, unread inbox. Maxine is my amazing right hand. She's my executive assistant, and the last like year and a half of my life have been incredibly improved because of her. I had over 100,000 unread emails in my inbox when she started, and it drove everyone crazy. So emailing me, I have a bunch of emails. You can put them in the show notes. One of them is lc@gulpdata.com, like Lauren Cascio, just LC. I guess I'll give my personal one if you want it. It's Lauren dot Cascio 88 at gmail.com. That's my personal email. So I do answer emails. That is how I'm most responsive these days.
Yeah. And shout out to Maxine. Thanks for putting up with
Oh
me.
my. Oh yeah, you've met Maxie. Isn't she incredible?
She's
She's
awesome.
wonderful.
Yeah.
Yeah,
I need a Maxine in my life.
everyone.
Everyone needs a Maxine in their life. Listen, Lauren, this has been awesome. We'll get those emails in the show notes. Thank you for taking the time today, and thanks for impacting the world the way that you've been doing. It's great to speak with you. Thanks for
Thank you so much. And likewise, I love the work you're doing. This
thank
is
you.
an incredible opportunity for entrepreneurs.
Absolutely.
So
Us Southeast folks
cool.
got to stick together. Puerto Rico and
Yes, Floridians.
Florida. You got it. All right. Hey, thanks, Lauren. Take care.
Bye.